this is a very exciting area. Nobody's covering this stuff in the same way. We think it's very, very important. And most importantly, I actually think we got 6 years before we have no idea what's about to happen because of the economic singularity. And this 6 years is the 6 years to make all our money. And if we don't, I think we're going to go into a world where we have no understanding of what it's about.
Raoul Pal, a respected macro analyst and prominent crypto enthusiast, holds an exceedingly optimistic view on cryptocurrencies and tech stocks. He perceives the digital assets industry as a rare, once-in-a-lifetime opportunity for all types of investors. While some advocate for sound money in anticipation of a complete collapse of the global monetary system, Pal diverges, asserting that the next phase of the monetary system is already in development. He believes governments will prolong the transition until it's fully developed, ensuring a smooth shift. Pal's exponential age thesis hinges on rapid technological advancements, particularly in robotics and artificial intelligence. He attributes the world's severe debt problem to factors like an aging population and reduced productivity, suggesting that AI and robotics can alleviate these challenges by revolutionizing productivity. Pal predicts that the exponential increase in productivity from AI and robotics will not only address the debt crisis but also significantly boost GDP growth. However, he cautions that this transformation will drastically alter the world as we know it. Pal emphasizes the urgency of seizing the opportunity presented by the cryptocurrency industry, estimating a 6-year window to capitalize on it fully. In a recent discussion on the Real Vision YouTube channel alongside David Mattin and Imran Lakha, Pal provided a crucial update on the crypto market and delved into the future of artificial intelligence and artificial general intelligence.
How many times have you eaten junk this week? You're just wasting your money. Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. Skip your next junk meal and instead invest in your education. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
If we think that liquidity is the biggest driver of risk assets and particularly growth assets, crypto and tech are growth assets. If you remember, they led the cycle because they're driven by liquidity and not the business cycle itself, which is what drives stuff like the Russell 2000 or oil companies or gold miners. They're all driven by the business cycle. And we see that right now, the ISM is struggling to turn higher, and then we'll have an upcycle, and those stocks, those cyclical stocks will do well. But technology way leads that by over a year. Its liquidity in the US at its simplest level is driven by, it's called Fed net liquidity. It's driven by the balance sheet. Is it rising or falling? Well, right now they're doing QT, so they're taking liquidity out of the system, but that's offset with the reverse repo. They've been draining that. That money goes into the market, into the short end of the bond market. That's been adding liquidity, and that more than offset the Fed. Then there's Janet Yellen and her checkbook, the Treasury General account. That's her current account. And we had this liquidity withdrawal from the system based on the fact that there was a reasonably big tax season because the economy grew reasonably well last year. Those taxes come out of money market funds and go into Janet's checking account. So they're now not able to be used because Janet's not spending it yet. So that money comes out of the system. That's a liquidity withdrawal. Okay, so that's what was driving tech down and crypto down. Then what happened yesterday is two important factors. One is Jay Powell said, hey, listen, guys, we're not quite ready to cut rates yet. We're definitely not going to raise them, though, but we're going to do less quantitative tightening, but a lot less, from 60 billion down to 25 billion. So that's if you think of quantitative tightening as the Fed putting its head on the beach ball, you take it off, it rises. He's allowing liquidity to come. On the other side, Ellen said, well, what I'm going to do is I'm going to buy back some of these illiquid bonds at the long end of the bond market. Those illiquid bonds, that's just a recycling of liquidity into a less liquid part, but it's adding liquidity into the system. So both of them signaled, we want to add liquidity here. So that was good. The Japanese intervened. They're selling dollars, selling of dollars, intervention of liquidity. So there was a lot of liquidity came back in. And the point being is what we saw with the markets drawing down was liquidity coming out. What happened today and yesterday in crypto, it kind of figured this out immediately, was liquidity is coming back. So that's really the big driver here. As I've said in the everything code work, is all of the central banks have to fund their government's debts, and they all have to work together, and they all have to get interest rates lower, and they all have to put liquidity in, because if not, the numbers don't work. And so that is the game that's actually at play here. Everything else is basically not.
It's widely acknowledged that the global monetary system is teetering on the brink of collapse due to its unsustainable nature. Financial analysts, economists, and proponents of sound money across the spectrum concur that the monumental global debt burden renders the fiat system obsolete. Raoul Pal contends that the key to addressing this global dilemma lies in boosting productivity, a feat achievable through exponential scaling with the integration of AI and robotics. In a recent social media post, the former Goldman Sachs executive outlined his role as a macro analyst and entrepreneur, envisioning the future and charting a probabilistic path towards it. Pal predicts a significant advancement in artificial general intelligence models over the next 6 years, resulting in a technology-driven golden age of productivity. He raises thought-provoking questions about the implications of AGI on the economy and GDP, envisioning a world where AGI models reshape businesses and accelerate the pace of innovation and disruption. In a discussion with Mattin and Lakha on Real Vision, Pal elaborates on these forthcoming changes and underscores the importance of early preparation by investing in cryptocurrencies. Here are more excerpts from the interview.
I've explained to many people that GDP growth is driven by population growth, productivity growth, and debt growth. Debt growth stopped in 2008. It's now just repayments of old debts. Population growth is slowing down or shrinking across the entire Western world, plus Southeast Asia, plus China. So we've got slowing growth, we've got massive debts. That's the big problem we're in. And they've been debasing currency to deal with it. But we have AI, which is infinite human mind knowledge. David writes about this a lot. It's going to be knowledge is going to be like water. It's going to be free and ubiquitous. The robots, whether it's Optimus, whether it's Figure, whether it's whatever else Amazon is using, are going to be everywhere. A Tesla, after all, is just a robot, a car robot with AI in it. What that means is you have infinite population growth in an economy. Infinite population growth means, what the hell does that mean to GDP growth? And if you lower the cost of electricity that we talked about earlier, you increase productivity growth. So you start to get bananas outcomes with the economy. What happens when AGI comes? The all-seeing, all-knowing AI. What are financial markets at that point? Surely the AGI just wins all financial markets. What job does Imran, myself, David have in that world? We don't. What does it mean for your investments? What does it mean to run a company when everybody can just copy your business using an AI or an AGI instantaneously? When you could say, hey, look at this website, repeat that, it'll do it. Why do we even need humans to make the decisions when you just give the AI the role, hey, you're an AGI, figure out how to make money, right? It's so complicated, and this is coming really fast. By 2030, I think we're coming into a world that nobody understands, and economic models will not work anymore. I don't even know what money is in a world of infinite abundance. Now, I'm not saying 2030 is a doom date. It'll be a process by which we get there. But by 2030, things are going to start feeling really, really weird. And we won't know why the economy is growing so fast, but jobs aren't growing. Why the economy is growing so fast, but something's not happening right with companies. Why do things feel dislocated? This is what is to come. And I think we got 6 years to make as much money as possible so we can just observe it from the beach drinking a cocktail and not try and scrap it out. Your kids are digital. They come from a digital world. They are more adaptable than we all are. We're more under threat than your kids or your kids, Imran, who will just grow up knowing nothing different. So I don't worry about that. It's the swathe of Gen Xers who kind of get lost out in the cracks here, and the older millennials who can't really adapt anymore. That it's not going to feel good. On the other hand, the economy is going to be booming. And maybe the stock market's booming, and but in the interim, this 6 years, we can all make money out of this. Whether it's crypto, whether it's technology, there's going to be a way to make an extraordinary amount of money out of the biggest technological change in all humanity. So let's just do that. We can worry about tomorrow. I'd rather worry about it on the beach than worry about it in some cubicle office at an insurance company in Ohio.
Pal's vision for the impending exponential age of technological progress aligns closely with Cathie Wood's perspective. According to the founder and CEO of ARK Invest, the combined market cap of 5 disruptive innovations is poised to skyrocket from $19 trillion to over $220 trillion by 2030. Similar to Pal, Wood predicts that artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage will drive a substantial increase in global GDP, potentially elevating it from the current 3% average growth rate to at least 8.5% post-2030. This outlook contrasts with economists' projections of a lower 2.6% average growth rate for global GDP in the coming years. Both Wood and Pal foresee the rapid evolution and convergence of these disruptive platforms as catalysts for a profound transformation in the global economy. Do you share Pal's optimism that we can navigate this transition without enduring lasting damage to the financial system? Feel free to share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.